Hello, traders. It's 8 a.m. Chicago time on Thursday, the 5th of September, 2019. Another gap day. Uh, Today is episode number 1589. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, here's the thing. It's hard to do these videos every morning and not sound like a broken record as the market is just doing the same, following the same cycle of dropping or gapping down, even worse, gapping down a lot on bad news. And then there's just banter back and forth, or some event, Hong Kong, whatever, and then we have this idea that this release from the Chinese government telling us that talks may resume, and then the U.S. government says talks are going great, and then the talks are set up, nothing comes out of it, the market drops again, and in the meantime we gap up and run during the optimism of the conversation, and then we roll over when both sides kind of start with the rhetoric again and the talks break down. And we've been seeing that. And of course, this has to do with China, and they kind of fire off their salvo of communication at night. And then the administration responds during the US day session. So we've seen really record gap ranges. If you accumulate the gaps over time, we're hitting record numbers in that we have a lot of gap and go kind of situations like yesterday and potentially this morning. So I want to start it off. I wanted to start off with that. The it's been in balance. The ES has been in balance for a couple of days despite the gaps during the day session, and the movement is overnight. I should redo my schedule and just be at my desk between 8 p.m. Chicago time and the European Open, probably the first 2 hours of the European Open. So you guessed it, risk on today. The leader today is the Russell, which has been a laggard. Money has not been flowing into small caps as well as it has been into techs in the Nasdaq or the blue chips in the S&P and the Dow. But today, the Russell's leading the pack up 1.38% or 20 and a half points from settlement. The Nasdaq follows on with 90 points up 1.17%. The Dow is up 275 points in the futures or 1%. The laggard today is gold. Gold down $14.10 after testing above 1,550 again. Gold's off almost 90 basis points. The bonds are off a whole handle and 12 ticks. The Bund is off almost an entire handle or 100 ticks. And the 10-year note is down about 20 big ticks. So crude is sitting sideways after putting in a V bottom and an aggressive push up after an aggressive push down the day before that. Tuesday we came in and crude sold off big, and then yesterday it bought up big, and this morning it's scratching its head or scratching something else as it sits around wondering what the next move is by OPEC, the Russians, whatever. So that's where we are. It's a market that has a lot of inputs right now, and definitely um, is definitely on edge. Um, Tomorrow is non-farm payroll Friday. A couple things to just get into our minds here. Tomorrow is non-farm payroll Friday, and that is likely to be a strong input into the September 18th FOMC meeting. So the market's going to be paying particular attention to that. The FOMC rate decision is expected to have another cut. The expectation, I think, the last I checked, is the expectation is for a drop of another 50 basis points uh, in 2 weeks. And so crude will be an input to that. So we need to pay attention. And it also means that the market might have to the products we trade might have to position themselves for that at the end of the day. That's the second thing I wanted to cover. The third thing I wanted to cover is next Thursday is rollover Thursday. All right, it's September, and next Thursday, the 12th, we'll start trading December indices. We're already trading December interest rates or treasuries. The indices will roll next Thursday, and then we'll go into expiration week the following week. And then finally, I try to remember to do this every month. The day before non-farm payrolls is the day it makes probably the most sense to have you guys in view. Just punch in the city and country that you're in, or city and state if you're in the United States, just so that we can see the community that we're a part of. Community to me is the key thing that drives everything. It drives Convergent and everything else. So if you want to do that, fine. If you don't want to, it's cool. You can also add these to the comments of the video if you're watching after the video is done. Otherwise, you can put them in the chat window in front of you on YouTube. And if you're on Periscope, then you can put them in the comments there as well. This way, people can see who's around them, and I think that's we're traders are pack animals, and it's just good to know who's around. And then the last thing, it's for Convergent members. It is group mentoring day. We have a group mentoring session scheduled for today. Check the calendar and check the invitation to it. Make sure you attend. The goal with these is to have you, they generally have been very successful. We've had many traders have a moment of epiphany moment through these group mentoring sessions. Make sure you attend it, please, if you're listening to the Trader Bite. This today, in terms of what's ahead, we had ADP come out, and it came out strong, expected at 149,000, came in at 195,000, and non-farm productivity and all that came out as well. We did get our the initial claims and so on. But what's important for today's ISM non-manufacturing expected to come out a half hour after the open, so at 9 o'clock Central, 10 Eastern, along with factory orders. Pay attention to this number. It might be a mover. Again, another input into the condition of the economy and the FOMC. So again, half hour after the open. Other than that, not seeing anything big on the calendar, but I do expect there will be tweeting or something. The overall market is responding to the what looks like a stepping back by the Hong Kong's executive that essentially is saying that they're taking back the extradition bill, and that the market is seeing that as quite positive. Also, the U.S. and China set a date to start talks at high level in October. Another big reason to pop. Here's what CT Bookmap shows, ctbookmap.pro. Look at that, baby. There's your announcement. Right in the right at the open of around the open of the Asian session, and then some of it was taken back, but overall the market is trending up with a fair amount of volume so far. So we have about 391,000 contracts traded in the S&P, when we would expect, which we haven't seen for a while, about 110 to 150,000. So we'll see what happens. We'll see if POTUS, there's an interesting name that I heard heard recently to describe the tweeting, but probably inappropriate for here. But POTUS is expected to tweet something out. Let's take a look at what we expected yesterday. Yesterday, we're opening in a gap. The expectations for a pullback to at least 24.50. If you watched the video yesterday live, You probably saw that I talked about 2450 being the MC point of control and the magnet in this area, and I highlighted the fact that these 2 days here were on top of each other in terms of the most traded price, which moved our point of control from 28.5 to 24.5, and that's likely to be tested. And so the primary scenario is to drift down and then push up and leave a gap open. Guess what we got? We got just exactly that. In fact, I can show it to you on for the first time. For the first time, uh, um, inside of a trigger chart, we didn't have that many rotations. The fact that I can have so many two-tick Renko bars fitting on one screen in this zoom level is tells me that there wasn't all that much action yesterday. But it's pretty cool to see. There's an open auction right there, out of range, open auction out of range, and we bounce off of this 2650 area quite a bit, and then we finally break through. So thinking short, this area right here, confluence VWAP, OS low, and mid, and the expectation is for a potential continuation and then a rise up. But the fact is, it got its target of around 2450 at this point, and then we ended up with a gap zone beneath us. As you can see, it's marked here in my master levels, which are actually on a cloud server, and those of you who have IRT have access to these master levels. Everybody has access to these master levels by selecting the flex level indicator and choosing a Futures Trader 71 master levels, and it'll pop up on your screen. So you can send a message to support at convergenttrading.com to figure that out if you need help. In any case, we have this gap zone left behind, and then we're pushing higher. And remember, the target above is 2942. We couldn't quite get to it. We got to 2939, and overall, to me, it looked like it was really brewing to do something. So if I remove everything else and look just at the price action and the profile, you'll see that at the end of the day, well, let's do that again. At the end of the day, we shifted the point of control from here, this white line, up, and there was a ton of compression going on into the close, and the volume was to the upside. On the buy side, we closed on a high tick, and so that is likely to drive us through that 42 area. If we push through the 42 area, remember I've been saying 45, 46, and then we push through 46, and we're looking at 50. Those are pretty tight levels. There's a lot of structure in this area, and then above there it's 68 and 71. 71 was the overnight high, and we are there. Okay, so this 4175 area may not look familiar to you. So let's take a look at this chart. Let's send this profile back. Okay, and look at this baby. I mean, we've done a lot in this 42 to 45 area. Check it out. We've tested this area quite a bit over the last month, and we pushed through it. So yesterday closed at its high, quite bullish. So we have a gap and go situation yesterday from the prior day, quite bullish. And I had talked about the fact that this is likely to squeeze higher. I don't know which day it was. It might have been late last week or on Tuesday, but I was talking about this setting up for a pretty strong short squeeze, and we've got it going on right now. And so we have the market gapping quite strong. It finished finished at 29.39, and we're trading at 29.65. That gap has a low probability of filling. What does that mean? That means that your charts should show some sort of reference area here for a potential retest to this low volume node. This low volume node in the MC point of control, in the MC, or sorry, in the composite, this low volume node is likely to be tested at some point in the future before we have a strong continuation up. And um, the big area above us is 3007. That is the MC VPOC of the next area up. So immediately today, we have 75, 76 as resistance right here. We have a low volume node, and then we push into a high volume node on the composite. Pay attention to that. This area here is likely to see at least a small reaction if we get up there and take out the high. Where we'll see how it goes today. My expectation really is for it to gap and go for a little bit, but mainly sit sideways. I do not expect us to continue driving higher today. I expect that most of the buying action has already taken place, and we're likely to be stuck in a 15, 14, let's call it 14 to 15 point range for the day. I don't have very high expectations. It's already done its job, and it's likely to be stuck in, again, this low volume node area. I expect it to just go back and forth, back and forth. And as I said, if I wasn't clear enough already, pay attention to the 75, 76 area above and 42 to 45 areas below. These are key reference areas that we need to pay attention to, and that's what we've got. Okay, so by the way, this chart does not show the overnight action. You notice there's not a bar connecting where we are because I'm looking at today's session only. I do take into account what's going on overnight, but I'm keeping the day session separate because that's, we're trading an index derivative of the S&P 500, which has more volume and more action in the day session than the night session, although that's changing over time. Okay, so that's what we've got. Again, here's what Bookmap, CT Bookmap looks like. There's a lot that's happened here in the overnight session. Tons of collisions. We have collision zones all over the place. Okay, and we've pulled back. We put in a high. We retested the high, so we have an impulse on news. We retested the high with a lower high here. This is a lower high, and then we come back, but we haven't quite hit the SOC, or the scene of the crime, from the news event, which is way down here, 2942.43. We haven't hit that. It's holding strong, and it's kind of there's just been a lot of liquidity and action in the overnight session, and I'm expecting that to continue. I expect it to ping pong around, though. Look at how the map looks. Looks like something out of Predator or something, the movie. But lots of liquidity above in the 79.80 area. And then liquidity in the 76.75 area right here. This is the area I told you is a key reference area right now. And then just above us between 68 and 70 and a half or so. Underneath us, there's liquidity down at 60, and then below that at 52.50. That's how things are shaping up currently. How do we use that? What do we know? It's, liquidity by itself in a vacuum is not as important to me personally. It may hold, it may not. I don't know. Maybe someone else's key reference area, and I'm not aware of it. But I marry my stock zones with the liquidity zones, and those are areas for me to look at. Okay, so wherever there's a stock zone with liquidity that remains, and that's why we got to look at this live, because a lot of this stuff just cancels. Then I know I need to take action, and it would take the market quite a bit of work to stop me out. This is for those of you who've been around for a long time, have heard me say, put your stop where you believe the market has to do work or has to really struggle to tag the stop. And a lot of times liquidity areas help outline that when married with a previously defined level. You also notice that the stock zones, these gray bands, are stacked in this area. There's a lot of structure in this area, and that's the reason for that. Okay, so what are we looking at for today in terms of where we open, where we're likely to go, and so on? Um, we are leaving a lot below us. So the primary scenario for today, given the action so far, the primary scenario, again, we have the point of control beneath us. Oh, I did not show the overnight session. Let's fix that. We need to look at the overnight session. So this is the overnight session in a bar chart. This is a 15-minute bar chart, and it shows us where the bulk of the volume is. We have basically what is a P-shaped profile. This is what's called a P-shaped profile, and the way it's set up is it conforms with a short squeeze, with the boundaries right at 2950 and 2970 in that range. Beneath here, we're likely to push into the opening where it opened and where yesterday closed at 29.39, and we would fall below this 42 area. And remember, above us 75, 76. So overall, as I said, pretty strong volume now, 402,000. And it's holding steady to the top of the range. So the expectation, so our overnight inventory is probably 98, 99% long, with delta showing long. The delta is positive, more aggressive buying than selling so far. So again, what does that look like in terms of what we've got today? The expectation this morning is an open auction out of range that kind of lulls us in. This is kind of like yesterday. I'm looking for it to test this 71.75 area. 71 is a weekly stock zone, and then I'm looking for an impulse down for a push into 54, and then the liquidity at 50 potentially before it holds steady and finishes sideways. I expect a profile that looks somewhat like this morning, but again, that's it's probably looking too far into it. But the expectation is for it to clear everything that's above that weekly stock zone level at 71 and the overnight high, and then it becomes more comfortable to get short, and then the targets are 54, 55, and then 50 even. The secondary scenario is an open auction that then drifts down. It doesn't test a high. In a scenario where we start to drift down, we are likely to go into a sideways pattern into tomorrow's number. So there's not a very high expectation of anything dramatic going on if we don't test and impulse down. A secondary scenario where we just kind of drift sideways or drift down is likely to be a difficult trade. I prefer not to see that, but we take what the market gives us, not what we want to see. With it being a gap situation, make sure you reference back to the template day. With the gap situation, we have an important, strong opportunity for an open drive, an open test drive, or an open rejection reverse. So in that situation, I'm looking for an open test up, drive down. If we see a drive down, that's much stronger action than in scenario one, where we just kind of drift up and then have an impulse and then drift down. A drive down could give us quite a bit of range. And of course, that could be driven by the action from the administration. And the target actually for this is 2930. Okay. Scenario four, open, test down, responsive, and then drive up. And in that case, we have a gap and go situation. I'm going to draw scenario four in here. I don't know what color I've used for scenario four before, but I guess we'll go ahead and use this type of blue. And so the scenario four, if we see an open test down and then drive up, be careful This is an indication that we do not want to be short. And we start to drive into the areas above the 83, and there's not much up here between 83 and 95. I don't have too much structure up here. So scenario 4, this is a horrible color for the background. Scenario 4, if you see a drive, do not trade against it. Do not trade against it, okay? So that's how things are shaping up. This is a good day to kind of let the first 15, 20 minutes go by, let the market figure out where it wants to go. Our job is to detect the wave that's coming and to surf it. Our job is not to try to create a wave or start surfing in anticipation of a wave. We need to see what the market wants, and then our skill set is to read the order flow or whatever method you use for entry and then ride that wave. And then these scenarios tell us where we need to step off based on the market action. Okay, keep a runner on for whatever it's worth, but in general, we want to bank our risk, uh, in a reasonable at a reasonable distance. Good luck today. I'll catch you tomorrow. Take care.